Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete and I'm here in this occasion to give you an update on another asset, another stock. In this case is McDonald's. Just before the earning results come out, we are going to analyze the company, not from a technical analysis perspective only, but also from a fundamental perspective, give you also a recap of what the company have done the last few years and what is the real situation of the company, more than the simple charts giving to you the trend of the price, which is something we're going to do later. And you will see that following our previous reports, even our charts are well precise on prediction on the movement of the companies. Now, before we start with the report, please click on the subscription button if you are not subscribed to this channel, and click on the bell if you want to receive a notification anytime we update new content on our channel. Let's go. Now, as usual, I have done a presentation to go point by point, data by data, topic by topic, and do not miss any detail about the company to give you the most professional update on this profile. Strong momentum heading into earnings. What is the situation of the company at the moment? Well, it's not bad. The expectations on the company are good because the company was suffering certain drop down in earning results since the pandemic crisis mainly, but especially the bottom one, it was on the Q4 2024, which it was declining 1.4% on the earning and sales growing. Now, what we expect, and we have the last quarter, Q3 2025, was a growth of 3.6%. I'm going to show you the chart in a minute, so you will see in a chart what was the growth and the V recovery shape of the company in terms of sales. Wall Street expects Q4 earnings per share of $3.04 and also 6.83 billions in revenue, which is a 6.9% year over year compared with the previous period, driven by successful and value menu campaigns and expanding loyal programs. And this is the main topic of McDonald's. If you want to analyze also not only the charts, as I say, but also what is the situation of the company. The company has been playing a main strategy, which is just use platforms to loyalty programs to give you discounts and special offers to those ones who download the app and order the menu through the app, and also giving a new prices. What is the meal deal they were offering? The value platform and meal deal basically was giving really good prices for really good deals for the meal. That's one of the reasons why it was rising back the sales. Let's take a look on the chart so you will see what I mean. Main factors: global footprint, finance scale, and revenue streams. Well, at the moment, there is 55,300 restaurants around the world in more than 100 countries, with 95% are franchise, and therefore 93% from 2019 clearly shows that it's growing the expansion in franchise business model, which is good and bad. It's good because it's an expansion worldwide, but it's also bad because it's increasing the dependency of the company on those incomes coming from third parties who basically are just renting the McDonald's branding to explode the business. Interesting point here is still part of the what it is, part of the revenue. We will see, well, part of the business is the equity that McDonald's is accumulating through property ownership in buying basically properties around the world for the restaurants and so on. Final scale, 2.63 billions in trailing 12 months revenue, which is 1.3% growth from the previous period, and market capitalization of $232 billion at 9th of February 2026, the last update, so not bad. Franchise revenue 12.24 billions. Just make a comparison between 26.3 billions of total revenue in the last 12 months with those 12.24 billions just coming from franchise revenues. Over company operated sales, which is 7.15 billions. Massive difference between the sales generated by McDonald's, 100% ownership of the company, and the revenue generated by the franchise businesses, right? What else? The recovery, as you can see, is a V-shaped recovery in the company, in the performance of the company. We titled this like a turnaround story. After hitting a pandemic era low with 1.4% low US comparable sales for Q4 2024, affected by the E. coli incident. One of the main incidents related with the company was the infection of E. coli on the food, consumer fatigue. McDonald's rebound strongly in Q3 2025 with 2.4% US growth in United States. The recovery was powered by, here's the point, two main strategies. One, it was the $5 meal deal, a massive good deal for a meal, and new Mac value platform, a platform just orientated to those users who upload the platform or download the platform and start to sign up. They can receive precise offers about certain menus that you only can order through the app and go and collect and so on. Operative margins have remained remarkably stable. The whole goal we can see if they are betting in this kind of a strategy, Mac value platform, mainly what they want to do is, and we will see later, partnership with Google, is just use AI, use also the data control to know what the customers are looking for, what they like it, and therefore probably run strongest strategies in terms of loyalty programs for those customers. Now, key factors for the company: growth drivers, loyalty program escalating to 250 million of users by 2027. Massive goal, massive target. At the moment, it's 185 millions. Digital channels for representing 40% of sales in top markets. Again, they want to make online sales through the platforms. Aggressive unit expansion targeting 50,000 restaurants by 2027. And AI-powered operations partnership with Google Cloud. Key risk, the inflation, the commodity inflation worldwide, also the value war with Burger King, with Wendy's, with other fast food restaurants that are also running their home programs. Currency headwinds impacting 65% of the sales are outside of United States and therefore can be influenced by the change in the worldwide trends related to United States. The make or break question, and it's very simple, is if this recovery can remain in time sustainable or not. If it's just one episode to recover in V shape, or it's actually one step for the next stage of the company, keep going, keep growing, and with stable sales. We don't know. That's why we just jump into the charts immediately, which is this. This is the main chart we got for the company. As you can see, it's very clear. It's an uptrend in long term, but we can see from 2024 if it was a massive drop. By 2025 we got a lateral of movements, and we can see that in 2026 we start breaking up new top records, which is about $321 per share. That was good, that was positive. Let's make zoom again and you can see exactly what I mean. But still we need to wait and see if this is just, again, a temporary situation that is breaking up in false the top records on the company and drop down again, or it's gonna remain stable above $320 per share. The only way to know it is just wait until the earning results are published. So therefore, I will consider this company has if it's already in your portfolio, just hold it and wait to see. And if it's not, just wait and see what is the earning results. And if we see a consolidation and even a pullback through the area of $320, which could be the case, around $318, $319, $320, all this area could be a new long entry point for those ones who are looking for include McDonald's on their portfolio. So far, that's the only strategy we can run here. I hope this works for you and you find this video helpful. And remember, if you're a subscriber, see you in the next reports. Take care. Bye-bye.